Hi everyone, welcome back to my channel, the 8th wonder of the world. In this video, I'm going to talk about the term operators in the context of the Indian stock market. Friends, if you're new here, subscribe and press the bell icon for more notifications from this channel. Hi friends, I would be doing a series of videos on the basics of the stock market and explaining few topics. This video would be one of those videos in this series. The term operators is used when explaining a particular category of participants in the stock market. But this term is used negatively. Over here, I'm going to explain the basics in simple words. Let me explain about the stock market mechanism. A stock market is a marketplace where the buyers and sellers come together and exchange shares between them. For example, let's talk about Infosys shares, in which Mr. A is planning to purchase 100 shares of Infosys and Mr. B has 1000 shares of Infosys and he is planning to sell only 600 shares. During the stock market hours, Mr. A places an order to buy 100 shares at rupees 710 and B places an order to sell 600 shares at 710, which he holds. So now, if the price set by A and B match, Mr. A gets 100 shares from B. Out of the 600 shares which B has, 100 shares are sold to A and the remaining 500 shares may be sold if there are many other buyers. So imagine there are lakhs of buyers and sellers at the same moment. So lakhs of shares are exchanged between the buyers and sellers, which leads to an increase or decrease in the share price. When the buyers are willing to pay more or the seller quotes higher prices, the stock price increases. But when the buyer quotes a lesser price and the sellers who wish to exit sells at a lower price, this leads to the stock price to decrease. This is termed as supply and demand, which affects the share price to go up or down. Coming to the main question, who are the operators? The high-raising explanation is the operators try to rig market by artificially creating demand or supply of a share with the rapid changes in the stock price by creating a surplus, and they make a killing in the profit in a short period. The manipulation of the stock price can be done by individuals or a group of individuals. It can be noted that the operators have used disposal of money to access and have large margin, as it can be seen in the stock price a huge spike in the volumes of the operator driven stocks. The operator might comprise of big traders, market influencers, HNIs, high-net individuals, ultra-rich people, and brokers. This is my personal opinion and based on what I observed in the stock market. Few people may deny the impact of operators in the stock market or may deny the existence of operators in the market. Nonetheless, this cannot be denied when looking at the price movement of quite a lot of companies, especially the companies having less than 300 crores of market cap, face price manipulation. I believe the operator may promise a certain percentage of returns to the big investors who provide access to the money or provide money to put into the market. There may be an element of commission for the parties involved in the company. So now the question is, how more participants come into the picture? This is where certain brokers and sub-brokers come into play and promote the stock. So there is participation from a wider audience. Many times it is evident in the stock price movements of the company which are operator driven. There are potential good small companies that run up even before the information or positive news is available publicly, as a certain group of people is privy to the information before many retail investors. In few instances, the stock has run up without any positive development. Investors should look at the company only if there are positive news or the company is in any industry which will be an important industry in the future. Now, talking about the retail investors, we end up in the last bar in this chart. I know this bar chart does not give a complete explanation about the scenario, but I hope you all get the point. When the bar changes into red, that's when the price starts falling and the retail investors had failed the brunt of falling prices, as you can see the man running away in the last chart. Another thing called circular trading, which is banned by SEBI and many members have been banned. I don't have a lot of details on it though. I guess it is evident from the word circular, where the buying and the selling happens between few parties and the price rigging happens. Finally, in my opinion, the operators have a big impact on certain companies. I may be wrong as I have not come across anyone and cannot conclude with 100% certainty. So, retail investors should watch out and decide the investment according to their risk profile and investment allocation. Certain retail investors should avoid all such stocks if the price movement is too erratic with upper and lower circuits continuously. Unless there is a fundamental change or any positive news, the upper circuits are not justified and are running up because of the operator's play. Thanks for watching this video. Please like and subscribe and press the bell icon for more notifications from this channel. This content is intended to be used and must be used for educational purposes only. Please do your own analysis before making any investment based on your own personal circumstances and consult your financial advisor.